recognition. All right. Thank you very much for people on the call as well. I believe you're in listening only mode, and we have people here in the room as well from the media here in the Netherlands. I'll say a few words up front, and then we'll just go into Q&A. So we had the good commercial and financial results in 25. On the customer side, we grew our primary customers quite a bit. So we had over 1 million primary customers in 25, which 350,000 in the fourth quarter. And if you now look at the total number of customers, but I'm talking private individuals, obviously, then over 15 million are now primary out of the 41 million that we have. It's not only the number of customers that increased, but also we had higher business volumes. Lending book in 2025 grew with 57 billion euro, but that's 8% compared to the previous year. And actually, it was double the lending growth we had in 2024. Clearly, we were very big, one of the bigger lenders in the European economy. And we have 376 billion in mortgages, 14 billion in business banking, 266 in wholesale banking. I just give you these numbers that gives you the size of the lending book. And with that, we're also a top 3 mortgage provider in Europe, at least. And also, when we talk about deposits, including savings and current accounts, the total amount of deposits grew in 25 with 38 billion, that is 6%. So in aggregate, our total balance to clients, which is deposit and lending, grew with on average about 7%, 8% lending, 6% deposits. And of course, we also continue to attract investment customers. You know that we want to diversify. We do a lot in lending or everything with interest, but we want to, of course, do more with customers. So we have a more balanced business profile. And an example of that is investment customers. So now we have a total group of assets under management and e-brokerage, normal banking specialists. The question, of course, is do you do that under your own umbrella or do you just sell? So asset management is more an asset management term, and more what we do is just sell or provide access to shares or funds to buy. So that's why we say it's asset management and e-brokerage. Those are about 278 billion, which was an increase of 60% compared to 24. So it just shows you that we're growing very fast. We also come from a relatively small base, so that's why it's also all that much so fast. And then we go to the income side. So we have customers, business, and we say income. So interest income over the year was good. It held up well. Please note that we still had some headwinds from a lower replication volume on the liability side. It went down, and therefore your replication also goes down on the liability side. So we went through the trough mid-year, and now we're getting out of it. That's why you saw, amongst others, including also lending growth, that we had a 5% growth in the fourth quarter. So you see that we're coming out of the trough in liability income. Fee income grew 15%, 1.5 to 4.6 billion. On amongst those investment products, but also in wholesale banking, because we're doing more with lending, but also capital market activities, because we invest in that diversification there as well. Expenses were under control. That meant 4% higher for the full year, but the fourth quarter was flat. So still, on the one hand, we need to pay more because of the CLA effects, amongst others, and we invest. And on the other hand, we have operational efficiencies to partially offset that. And the risk costs were in the fourth quarter about at the cycle average, but through the year were a little bit below. So it was about 90 basis points. We say through the cycle it's about 20 basis points, over 2%. So that looks good, so nothing funny there. That meant we realized a net profit of 6.3 billion, return on equity 13.2%, capital ratio 13.1%. Then we have a dividend that we propose for year end. So we're happy with the results. Of course, financially, but it starts always with the interaction with the customer and how much we have an interaction. I think that is what led to it. So let me stop there, and then we'll just go into all kinds of other things that we can talk about, and then following the results. Over in there.
Yeah. I wanted to ask about your SRT strategy and this 10.5 billion. At the end of last year. What can we expect for this year? Can we expect more sizes or more color?
Yeah, so we can expect a bit more. So we only started to do that for the first time last year. There are many banks who already did this for many years. But it also had to do with the fact that we had to get our models ready. So when we got under the supervision of the ECB, we came out of a regime that was more what we would call expert-based models, went to data-driven models. And you see that with, amongst others, banks who had their head office in the Netherlands, that we all had to improve our models. We all had to do it in Europe, but I think that the Dutch banks in particular had to make the models more data-driven and less only expert-based. And that took quite a number of years. For that you need data. When you're ready, you can then also be more precise about which part of that portfolio can you then sell and what does that mean in having lower capital. But if you don't know what the exact capital base is for that particular loan, you can also not say, I'm taking that loan off my book and therefore I take that capital off my book, because then the supervisor says, I don't know whether that's the capital that you can take off your book. So now we speak the same language in terms of what we sell. That it's also clear how much capital release you then get. And therefore, we started with this for the first time now last year in November, when we did 2 of these. But we will continue to do that in 26 and beyond. And we said that the impact of these trades in 25 was 12 basis points and 0.12% on our CET1 release. And therefore, we have more room. And this year, we expect that the trades that we will do will release 15 to 20 basis points, 0.15 to 20% in 26, and then we are gradually developing that muscle. It's also, by the way, and we also are going to develop that muscle in retail as well. I don't expect many of these trades to happen in retail, because it's always a balance between risk return, what you keep, and risk return, what you sell. Right? And the risk return in retail is very good, so if you sell it, you also sell a return. So you try to do it there where someone else likes to return better, we like to return less, and you can play with it in the market. But it also, especially in this day and age, so you see higher growth, we see higher lending growth and higher deposit growth. But with that growth, you also need the ability to grow, because that growth comes with capital. So that also means that you want to have more flexibility to also to have a valve that you can release capital so that you can grow with customers. If at some time you're full, and the customer comes and says, well, I'm sorry, I'm full, because if I want to do a loan with you, but not with us, mate, go to the next door. So that's why we have always been very much a credit-driven bank. So we can advise, we keep cash flows, and we keep it on our balance sheet, but that also has its limitations. Because at some point, if the growth in the market is faster, you cannot respond to the demands of the market, because you say, well, I can't grow any faster with my capital already. That's why it's also good to trade.
And you said that Dutch banks are as far as other European banks in changing the risk models from expert to data. Could you explain?
Yeah, so what you typically saw after the ECB came in, and the ECB works also with data-driven supervision. So in the past, there was sort of a joke that we'd come to a central bank and they said, so what's your loss given default on shipping? So if you lose a ship, what's your loss? It's LGD loss given default. Well, ship, you have the expert now. You have the expert on shipping. I looked at him. He's old and gray. He has 30 years of shipping experience. So I said, what do you think? And they said, how much? 20%, 20% now. 20%. So based on that, I'm simplifying the point. Then people say, okay, so in that shipping portfolio, when you lose a ship, you lose 20% of the loan. And why is that? Because the old and gray expert says, based on his decades of experience, and that's why I went this way. I don't know.
He is looking happy either, so.
He's thinking of his retirement. But then the ECB came, and the ECB is more data-driven supervision. But if you look at the supervision of more Southern European countries, that was also more data-driven. So the way that the ECB started to supervise was more akin to Southern European countries, and more Northern European countries were more expert-based. That's why there were different speeds with different banks that change into the model of the ECB. And if you look at the Dutch banks, compared to some, but also other more Nordic banks, compared to models. So in European banks, we had more own developed models. Where in the south, they had more standardized models. Standardized, by the way, it's the same. They had more data-driven models. We had more expert-based models. And then we had to converge.
Do you think of if the whole market is going to those SRTs increasing? What do you think as a market risk for the whole financial sector?
Yeah.
Pushing, you're getting higher leverage. That's what you like.
Yeah. So the Dutch expression is everything with te for it is not good except for tevreden. So too much. So and that's also the case with an instrument like SRDs. So what the risk transfer does, it transfers the risk. It doesn't transfer the loan. So the loan is on your balance sheet, but you transfer the risk with it, and you transfer what they call a first loss piece, so you can calculate how much the initial loss will be that you transfer, and therefore your capital goes down. Right? But it's not the holy grail, because it means that someone takes that risk. Right? If the loan expires and we extend the loan, we go again back to this person and say, "You still want to have that SRT with us?" Yeah, sure. We'll do it again, right? And so as long as that works, it's perpetual mobile. But if the music stops, you get the loan back in your balance sheet. So if the guy or girl there says, "Sorry, but we're full," or "We don't want to do that anymore," so, but we're renewing this, well, sorry, you have to take it back. So with these instruments, you always need to make sure that what is the market capacity. Never make yourself dependent on one instrument only. And it's like everything with a bank, it's always about diversification. Diversification of risk in portfolios, countries, type of businesses, but also diversification of, how do you call that, insurance instruments, SRTs, CPRI, which is insurance, ECAs for export credit agencies. You also there need to diversify to make sure that you're not dependent on one element. When there's a market dislocation and therefore the whole market says freeze, and then everything comes back to, in this case, to your balance sheet, so that you need always to balance that. Now, if you look at ING, we're only starting. And so we are. If you look at there's reports of brokers that look at how much SRTs the European banks have been doing, and you see amounts, all the way on the right hand side, you see the Dutch banks. So that is. Does it in itself pose a big risk for ING? No, but we're always cognizant of if this goes too far, what does that do?
Just a follow-up. You said previously it was expert-based models, experts within
expert, yeah. No. So, yeah. Because those experts, they know best how it works, but if you then ask the experts, so do you have any data to substantiate that? The expert said, "Oh, I mean, look at me. 30 years of experience, what do you want?" So.
You write something about the investment product offering. Could you maybe paint some color on that in the different countries you work on, and on the success in the different countries?
No. So. I think maybe let me go back to, let's say, ING Direct, because we started ING Direct 25 years ago, and then we basically said the concept of, let's say, a post bank. There was then a telephone bank in the 80s, then you gradually became a digital bank. He said that there also seems a need for that in other countries. Our predecessor said that's when we started to go in these other markets, because there were no banks with no branches and just digital, and then he said, well, apparently there's a lot of demand for it, because many people don't want to go anymore to a branch. And then the focus was, let's just do savings. So we are the other bank. We are not their first bank. We are the other bank. So if you have additional money and you don't know what to do with it, open an account with ING. It's going to be very low price. It's going to be simple. It's going to be a very simple bank, not too difficult in all these contracts. It's going to be a few clicks on the app. We're going to make a good app. And you just put in the saving. We give you good rates.
And then we are going to invest that saving in our replication portfolios, and we also make good rates there. Now, that worked very well in a number of markets, and some markets it did not, and with the French price, but they sell some countries, but in a number of markets it worked very well. At some point, of course, then in the retail side, a very important thing happened, which is the financial crisis hit. And what did that mean is that the interest rates went down and became at some point even negative. And the long-term interest rate became equal to the interest rate curve became flat. So that business model, if you're very a one-trick pony, doesn't then work anymore, at least not in that period. It didn't really work for 10 years. No? From 2013 on, when the interest rate became low and negative in 2021-22, if you would say at that point, shall we start a business model and then do this with saving? Everyone said, this is a very bad business model. And so, it is that we already had it for a long time, and of course, gradually it comes in. But it shows the weakness of that business model. And so we said, look, we are growing up. We need to become more of a impactful. That's why we talk about impact and relevance. We really need to become a main bank for the customers. Yes, primary customer, but really become. In that setting, all these 10 retail banks that we kept eventually, so 9 of them in Europe and 1 in Australia, the concept was all the same. So it's all Orange, it's all Lion, it's all the marketing, it's all the savings, it's all digital only, mobile first. The concept was the same, but how they build it, we said, no, just do. So the entrepreneurship was very important. You know the local market best. We can't see that from this market that you do it in the best possible way. You tell us how you do it. I mean, look at the deposit rates that we once talked about. This country they say, yes, the core rate here is lower. Okay, the other markets grow with core rate plus fidelity premium, or they work with longer term rates. Every market works differently. It also goes for how do you employ your bank. So same in concept, different execution. So also when we start investment products, so we say, okay, let's then diversify. Let's open not only savings account, also current account. Because when you have a current account, that people put their salary on it, and then you do main business with it. Or let's do mortgages, or let's do investments. But the way we developed it in all the markets was just different. We said, okay, you have a different icon on your app. We have a different infrastructure platform behind it. We have a different provider of these assets because we typically don't provide them. We just sell it. So BlackRock and Goldman Sachs and Equity and all these, notice the French one, Amundi. And so we have, they have the product. We say, well, we want to package it for these type of customers. Then they will do that, and then we are the distributor. In every market, in a different way. In every market, different platform, so fiscal infrastructure platform. In every market, a different execution agent. Someone has to do these trades. And different markets, different reporting. So then you say, well, can I then see an overview of that? Sure. In every market, you do it differently. So why not? And so only gradually, so where we now really say, guys, we really need to diversify, because also cultural shifts in the bank, we said, hey, that's funny. You can these days also buy one infrastructure platform. It can be just one. We know that. It can be one execution agent. You can do one same of reporting. So we move to much more scalability in this product. So that's, and then I come back to your answer. Then markets work also differently in terms of, is it more just, the second thing that we did is that we were largely only doing what we call execution only. What they call brokerage. We said, well, here's the app, and you want to invest, or go to the app, you can invest, and we have a number of funds and bonds and God knows what, and so good luck with it. But then people come in and say, oh, but I want to have my father passed away, he has a house, and there is also a portfolio, and I want advice. No, go to the app, 3 clicks, you can invest. And so for many people, they said, yeah, but I have more bespoke needs than just simple. ING was built on the Postbank. Simple, easy, everything the same, no frills, no frills. But if you move up into the investment space, and nowadays you see many more people do that because the pensions cannot cope with it anymore, more people say, yeah, but only investing and getting an app for me is not enough. I need some type of advice depending on my situation. So we also need to move up. So initially, we very much focused on distribution brokers only, go to the app, and increasingly we need to move up in terms of more bespoke for different customer segments. If you look at the markets where we are the biggest, in Germany we're very big. And so of the 5 million customers, we're quite big in Germany, and we're growing. We're quite big in Belgium. We're quite successful in Spain, and we're now growing in Italy and the Netherlands. And it's horses for courses. And what do I mean with that? Why we were in Germany so successful? Because we the ING is being seen as a very good digital bank and really differentiates itself from other banks being the digital bank in the German market. And therefore, when people said, well, I want to invest in an easy way, ING, that's digital. So the reason why people started to work with ING in the first place was because of that digital element. The same is the case in Spain. In Belgium, people invest typically much more. So it's much more in the genes of the people to invest. You know the saying, Dutch people are born poor and die rich because of our banking system. In Belgium, people are being born rich and dying poor because they spend more. But there's a difference. The wealth is divided in different ways, so there's different ways to do things. So they invest earlier to save money for a rainy day, and therefore Belgium is also a big investment market. But gradually see also in markets like the Netherlands that it is growing because people do see, okay, we have a lot of savings. Savings rates are relatively low. The inflation has come down, but people have seen what it does if inflation gets higher for a long period. People see that the pension systems are changing. So we need to, I think that has been a conservative stance of many countries in Europe, we need to also realize it's good to be conservative and risk-minded, but it comes at a price. And we need to see how we balance that with balanced long-term savings and investments in different markets. That's why you see different speeds in different markets.
You say that in Germany and Spain, ING is still a digital bank. I saw some reports that maybe ING is also maybe an incumbent if you look at Revolut or other banks like Revolut. Do you notice that Revolut has a big uptake in Gen Z? And is that a risk for you?
Yeah, I think that we compete with all kinds of competitors. So indeed, I think 25 years ago, although the term neobank did not exist as yet, but then ING was basically the neobank. Actually, that word would be there. Because we were the first one to introduce digital easy instant services, no branches. And we kept it very small service. So we said let's do it simple, not all kinds of deep products in the market. We just do only one or two products. So that's for those particular products you go to ING, not for everything else, because that is then we complicate it. I just told you the story that we had to complicate the bank because at some point we had to say we're now too big, we need to do something else, but we make ourselves independent. So we compete with incumbents that are more branch-based models that move to digital, and we compete with new neobanks that are either focused on international payments, FX, like Revolut, or doing investments like Trade Republic or N26. So they all do the same as we did. We carve out a niche. They become very good at that niche. They roll out that niche in many markets, and then they think. Our challenge is to grow up, to get out of, let's say, puberty. That means that, and in the meantime, by the way, we build our own legacy. We built our own core banks in the different markets, much more digital than other banks have. But still, we have now legacy. So we are on the one hand working on decommissioning that legacy and going to the next step, cloud-based environments, make our core banks much smaller. In the past, the core banks, especially with the IBM mainframe or mainframe, whatever AS400 systems, I don't even know how they look now, but they just tell me.
They were big.
They were
big. I saw
big.
them in the archive.
Here we go. Yeah, they're very big. But also, they have everything is consolidated, product, service, KYC, and so everything is stitched up. So you can say, well, can we just decompartmentalize? No, don't touch it. Everything is linked. So it's almost like spaghetti of some, well, let me not say, some old systems, but you cannot say, oh yeah, that's how they did this and that. No. So as long as you keep that mainframe plus system, you're where you are. We already built most of our core banks on the cloud. So we have big on the cloud, but even in the setup of cloud, at least virtually, we built similar core banks, albeit virtually, but still linked together. The new core banks that we're building are much more simple. Only port client administration and everything else is modular. Then you can make these things much more global. But that was not how the bank even virtually was built in the past. So we are more digital than incumbents. There are things we can learn from the neobanks, like what they're doing now. So on the one hand, we have to test the trust of the customer, and we need to retain the agility of the neobanks. That's currently the phase in which we're in.
You had asked a follow-up question.
Yeah.
I read a report in Jeffries this week.
We all did, because it was in a Dutch newspaper. You wrote it, no?
But what they said.
What a bad article was that?
The biggest challenge is in countries that are more upcoming.
Are more upcoming?
Well, if you look at the countries where banking used to be stable, and where ING was like wiped off and was more like innovative.
Yeah.
At the moment, it's that you are maybe losing traction a bit because of the new banks. And I think that so I think we were sure, yeah. So what's wondering is how do you look about that services? And are there or do you share their worries about digital approach by IT?
Sir, let me get it straight, sir. You guys wrote an article, and now you want me to go to your article.
No, not really.
No, it's on Jerry's report.
I want to talk about the report of Jerry.
Yeah. So, I think, well, let me put it this way. So, we are able to grow very quickly. So, our growth, if you now look at our growth, has been bigger than the last couple of years. And so, I do not see myself constrained in our growth. Our biggest challenge is to deepen and broaden the activities with our customers. So, we were in many markets a relatively small bank. So, although you can see that we increased our primary customers from 40 to 50 million, to become the real primary bank, it basically needs, you want to be the number one or number two bank of the customer. And in the Netherlands, for example, in retail, we typically use one bank. So Jesus, why pay another €30 for another bank? So that does not make life complicated. In other countries, depending on the country, people use a few more banks typically. Maybe that will change here as well, I don't know. But our challenge is to broaden and deepen the activities for the customer. And at the same time, I think to your point, to also compete with digital innovators. So we need to do two things. First of all, where the experience of the digital innovators is better than ours, we need to close the gap. And you still see that. That's why we talk about that. If you look at our Net Promoter Score in 5 hours of 10 markets, we're being seen as having the best customer experience in half the markets we're active in. In other markets, we are top 3. It's not per se about the score, but it's about continuous focus on making your processes easier, more instant, less steps, how the customers perceive it. And I think there we also take, let's say, innovation from the digital innovators, because they do things that we said, oh yeah, that we haven't seen before. And what we take from the incumbents is, how do you now convert the relationship that you have and do more business with customers. So, are they challenging? Yes, of course they're challenging. But the incumbents are also challenging, but on different fields. So, do I see growth slow down? No. Do I see that they are serious competitors? Yes.
And you think that you will be able to close it if you can?
Yeah, because look, it's all about digital. It's all about digital journeys, and so you can measure these journeys individually. And so, for example, we introduced a subscription package in approach. That's, by the way, that's not about digital journey. That's more about the approach to market. So a number of these neobanks, they work with subscription packages, a little bit a la Spotify. So you don't take an account, you just get a subscription package. And if you want this type of Spotify account or whatever FIFA account, you get these services. If you want more extended services, then you pay this, and then you get so they do bundles, if you will. Now that's also a different way of, let's say, of focusing on sub-segments in our markets, but which sub-segment wants which service. And remember ING, that we came from that post-bank mentality. It is a one-size-fits-all mentality. So we want to make things very easy, instant, personal, relevant. But to be honest, that was the mantra. But to be honest, we were very easy and instant, but not necessarily personal relevant. We just said, like I said, with that, no joke, with that investment proposition, no, it's 3 clicks. We're the easiest. They said, yeah, but it's fine. But I have a specific problem. Not my problem, mate. 3 clicks. And so to be much more specific to whether it's Gen Z or affluent or pensioners or expats, and therefore really tailor your service, and for example, also subscription package, is also what you see with neobanks are doing. They focus on a niche or subsegment that says, I'm going to be the best in this particular subsegment. And what we need to do is to specify the needs of subsegments in our customer base. That's what we're currently doing to look at that. Sorry, to introduce that, and that's why we have, for example, next to improving our digital journeys, also brought these packages. For example, Romania, we will roll it out in other markets as well. Yeah, that's always the case. So there's always also incumbent banks that are now look at some European banks or American banks. They are going to market to go into a retail space and to SME. So it's not only the neobanks, there's continuous competition, and therefore it never stops. It's all about how do I get to the next level of the best customer experience to be ahead of competition. And that didn't stop with becoming a telephone bank. That didn't stop with becoming a bank that have an app. That didn't stop with being a bank that now has most of its processes STP end to end. And now people go to the next level and say, okay, how do I make my journeys more bespoke? And how do I use Gen AI to make it even more personable as well? That will continue.
Yeah, question about since you touched on Germany, one of the big questions that you're referring to is possibly Germany as well, audits, Kubernetes.
Yeah, I think that so coming back to what Eva asked, and more broader story. So with this ING Direct, we were a very small bank, and also in Germany when we started ING DiBa, or it was DiBa at the time, we were a savings bank. Right? So effectively, and gradually moving into a bank with current accounts, then we moved into mortgages, and then we moved into a bank with a trading account, like we now have. But still, if you look at more incumbent operations, which we already started a long time ago, Like in this country and in Belgium, with all the predecessors of ING 150 years ago, we became full-fledged banks. So like we have here, for example. That means that in countries like in Germany, we do not have a number of services. By the way, we do have consumer lending, but very much focused on only a few segments. We don't have SME. That's, by the way, why some of these new banks go into SME, because SME, and especially self-employed, is also very digital. So there's a natural progression from a person who banks with you as an individual to a person who banks with you as a self-employed business. Right? It's the same account, the same processes, similar KYC, and so it's a natural progression. So therefore, doing credit, consumer credit, but also doing credit or current accounts with self-employed SME. That's why we started a digital SME bank in Germany. I don't think there is a good digital SME bank in Germany, and that's why we are developing it, because we're good at digital. So we use that angle to actually now say, okay, how do we now do this in a very good ways for self-employed and SME? But that takes a long time. And so this morning, in the analyst call, people ask, okay, how big is it now and compared to others? But yeah, but we're
How big is the SME bank?
in Germany.
Yeah.
It's small. So yeah. Yeah, but we have a 1.1 trillion balance sheet. So in total, in aggregate. We started with 0 in SME, and what you then do, you first, especially with self-employed and SME, the most important thing for self-employed people is not the lending, it is the current account. It's the payments. They don't borrow that much. They just want to have a current account, they want to make payments, they want to send invoices to their customers, they need to pay to their suppliers. That's how they start. And of course, when they then make revenue for a longer time, then okay, they get the opportunity also to borrow money. So, but if you look at the pyramid of mid-corporates, SME, in terms of number of clients, it starts with self-employed. This is from my own experience. So the self-employed is, let's say, a very big group of clients. They have SME, which is small, medium network companies, and they have mid-corporates, so companies until 250 million revenue. If you look at the revenue, in terms of what they make per customer, is of course very small. And moreover, these ones are more about payments, then these ones are about payment and lending, these ones are about lending. So these ones, which is a very large group, you need to really serve well in what they do with payments and supply chain and invoicing. Now, that's what we need to do first. When we look at the growth of number of customers, I think that last year, the third biggest country in which we grew the number of business banking customers was the third highest in Germany. So, high growth in number of customers, high growth in deposits. So they first bring in the deposits because they have an account, right? Then the deposits, and that's where we see that we are growing quickly, that we grow from a very small base.
But what I was just looking at, this is up in new NLS.
Oh yeah, we're doing that. Yeah, so it's not in that sense. Okay, come to the main question. So, therefore, if we can accelerate our growth, private banking or consumer lending or business lending, we will do that, because then we can do it a lot quicker, because before it becomes sizable, it will take a number of years. We are looking at the number of players, by the way, in many markets. And we haven't come in a number of these markets to an acquisition because it needs to fit from a cultural point of view. I don't want to disrupt the high autonomous growth that we have, because we have very good autonomous growth, and when you suddenly acquire something, everybody will look inside, okay, we now need to restructure and to integrate. It also needs to make sense from a return perspective. So in that context, we're looking at things. And if that doesn't fit, I'm not going to do it. So M&A is not a goal in itself. M&A is a means to an end.
Tuesday, on package of new one thing is right for an SMEs that bank pass now. It doesn't change in the Netherlands.
I don't think it will change substantially. I think that what is important, first of all, I think from a societal point of view, it is important that we, as a society, including businesses and the government and also banks, think about how do we make sure we take everybody along. And so the large majority of the country can take well part in society, but there are always parts of society that cannot, and that requires extra care. And I agree with that. So, for example, also if you look at, and that's not per se a banking problem, but banks are also involved in it. If you look at, for example, our digital society, our society is very digital, and the Netherlands, for argument's sake, is more digital than a number of other societies, and it brings many benefits, but it also leaves people behind, or there are some people that have more difficulty in becoming a part of the society because they find digital difficult, or they cannot find their way to the system. And therefore, there are all kinds of initiatives to just see, okay, do we need to help people offline? So, or can we together educate with other industries and the government, by the way, in how to teach people to become more digital, to make it easy for them, or do teach-ins to continue to be part of society. The same goes for a number of SMEs. How can we make sure that we do not leave people behind? I think that I think is part of that conversation. What at the same time we need to be mindful about is that in this case as banks we also have our obligations from, let's say, in our perspective. And the question that we then need to ask for ourselves is how do we make sure that we also keep society safe while enabling people to take part? In principle that should be the case. There always is. So there is always a question between accessibility, data privacy, and safety. And it's for politicians to guard that balance, and for us to give input on, okay, if you make this choice, this will be the consequence. Now it's upon you to weigh those interests to see where you want to be. And I think that's going to be the case here as well.
Do you think that vetting process for SMEs will be quicker? It will be just the same, but you now have
the coffee shops, this is about within that, there is a question about can you categorically exclude a sector or not? And I think that increasingly there is a view that feels so well, but why is that? Because each you should judge or audit or get information on each individual client on an individual basis rather than saying, well, all people who have these type of companies or all people starting with the letter S, we don't want to have. And so it comes back to, let's say, sort of a universal service obligation that basically says, okay, therefore you can categorically exclude this sector or not. And at the same time, you then need to answer a question, okay, but we do statistically know that there can be more fraud, money laundering, terrorism financing activities taking place because some processes enable that, so that also then does something to the requirements that you have on an AML and fraud prevention perspective. And then within that, and I think we are maturing that discussion now in this country. I think that is good, which is about let's take one step back. Is what we're trying to do with each other, is it really the right thing? Does that solve anything? So do I agree that banks have to play their poortwachters role, their gatekeeper role in AML, the WSA? Of course I do. Do I agree that we should have done more than we did 10 years ago? Of course I do. And then we need to see that are we then what we're doing, is it very effective or not? Well, not really. So, and that is because we have applied, all of us as society, so the pendulum swung a certain way at some point, and I think we're there now that people say, aren't you borderline just for the sake of borderline? Well, you asked me to. So let's now discuss together, and this is not finger pointing, we need to solve this as banks, the central bank, the lawmakers, the privacy authority. Let's jointly take a step back. And by the way, we do have roundtables now with the Minister of Finance on that to say, are we doing the right thing? Is this enough risk-based? Should we focus more on more risky elements and spend less time on less risky elements? And therefore make sure that what we do, we focus that effort on higher risk and less on low risk. And will that then be, will we then be completely insular of nothing happening? Of course not. Society, as a society, we take risks every day. I mean, if we don't want to have risks, stop driving. So let's not have cars. But we as a society have taken a conscious choice to take certain risks because that's how we want to live. But I think the balance in this case has become completely insular against money laundering risk. That is impossible. And therefore, the best way to actually fight it is focusing on the higher risk. I think that's a good direction.
About society, it depends on the unit. Are you in focus with the unit activity?
Well, we're in the past talking about something. And now we are more in talks, I guess, through media and the courts in that regard. So Milieudefensie said that they, already 2 years ago, Milieudefensie said that they would start a court case against ING. And a year ago, they filed that court case against ING, and then it took some time, and then we got, of course, their information, and now it is upon us to respond to that. So you see how dragged out these cases are. So we are about to respond in the next month or so in terms of the claims that they make.
Next month.
Month? No, a month. Singular. And then the rule is there, and I think, look, in the end, and we've said that we want to play our role in having a more sustainable society. So I think that the goals that we have are similar, but I think that we differentiate quite a bit in the way how to get there. And we believe very much that we need to do this in a transitionary path, that we need to do it with clients, that we need to enable clients to take on new technologies, that it takes time to build economical models, that it takes time to make yourself less dependent on fossil fuels, and we can't stop overnight. Yeah, if that's what people want, that's just impossible, and it's also not realistic. And if then people say, well, we want to have that judgment to be made by courts, well, then let it made by courts. That's one of the ways we can have disagreements, and that's one outlet to have these disagreements to come to fruition. Trust, and again, and that's why I want to focus on that. Much more important to focus on how can we help customers. I'm actually quite happy. I mean, with all the geopolitical tension going on, and talks about whether fighting climate change is good or bad, or whether you should invest in windmills or not, and there's all the geopolitical, there's a lot of noise around that. But in the meantime, if you look at our sustainable volume mobilized, which is sustainability loans that we did ourselves, that we underwrote or co-underwrote, so let's say it's an indication for activity, rose from about 140 billion to 166 billion this year, which is more than the target we set in 2007, and also in the US. And so I know.
And how much is the percentage of that, all your loans?
Well, all our loans are, we have a 750 billion loan book.
750.
But it's not only loans, it is also bonds and financial market transactions.
Yeah.
So you cannot compare them.
Compare it to the right.
I don't have that. But let me put it this way: it's I don't have that because then I need to look at all the FM limits, so I don't know that by heart. But it's quite a significant topic in our conversation with customers. So it's not like side business. Let me give you one example where you can see it that it's also because the activities are, for example, renewable energy, so windmills, solar panels, things, or new forms of electricity, batteries, for example, or circular economy, like textile that is being reused. So those are all different forms of sustainability. In terms of renewable energy, which is very much the only element which is about, okay, what did you finance on projects that are really about renewable energy, which is solar and wind and hydro and hydrogen. We made a commitment whereby we said that we want to grow their portfolio from 2.5 billion euro annually to 7.5 billion per annum by 2025. The figure for 2025 was 9 billion. So we almost quadrupled it. And obviously, we want to do that in a sustainable way so that we also can make money of it. So how do we do it in a way that economically it works also well for and the client and for us? So I just showed you that also renewable energy becomes a bigger part of the energy production. And I think that's very good. I think the biggest challenge remains is how can we get new technologies financed? How can we, in that transition phase, how can we make sure that the entire society facilitates that? For example, contracts for differences, temporary subsidies, sunset dates for certain factories that everybody needs to position at the same time. All those things will help industries to transition. And I see that more is happening, and for us that's the most important thing, because that's about where can you really make the impact? Well, not in court, but with the customers. That's what I found most. Coming Tuesday?
One of the other elements does have four banks.
Is it also Tuesday?
Yeah.
So it's Dutch Tuesday law.
Yeah.
All right.
I'm wondering how to maybe change your language management to respect get balance or a high what change to use bank?
Our ability to get talent in will improve. So most of the people that work with ING are working in operations or in technology. 60% of our staff works in that. I'm not even talking about risk management. So it's also tech or tech, the STEM studies, if you will. And I think it's good. Look, we want to be very good. We want to be the best European bank. We want to be a strong bank. Well, for that, I want to hire the best talent. And for that, we need to compete in the market. And to be able to compete in the market, I want to be able to compete with not with our hands tied behind our back. And that means that when we hire a significant amount of of our staff, we compete with technology companies, operational companies, whereby people say, I want to have a very good international experience, and I want to see how one of the elements that I want, which is a decent conversation, also I can compare with other players. And currently they say we can't. And can you explain me all the wet integraal betaalingskeringen? So I think this is a good direction that we take because it helps us in hiring better talent and retaining more talent.
Maybe the next one salary is like what you give to your chief instead of like
variable thing.
Yeah. Okay. Yeah. Look, I mean, the question is always, do people believe in variable pay or not? Is that a good instrument to motivate people or not? But clearly, if you are in a situation whereby you want to compete with other organizations for talent, you want to have flexibility in how you structure also a payment package. And when you say, well, others have more options and we have our limited options, that is limiting you. And it's quite unconvincing to go to someone, well, but if you work for ING, you just earn less. They say, well, then we need to structure differently. And there's only one way, and let's be honest. We can't say to someone, no, come here to work for ING, but you just get less because we have a different remuneration system. They say, well, then you guys structure your remuneration system differently, no? Or you pay me more fixed. So, of course, it gives you also more flexibility. And, by the way, it gives you also more direct performance measures with the variable pay. But I think it's more important that we get more flexibility in how we can track talent.
I have a question about defense exposure. Is ING looking at increasing that market we are in today?
Yeah.
And are you also hiring or adding people to help that plan?
We build a specific. So first of all, the answer is yes. We're growing quite quickly in our defense exposure. Again, there's different speeds in different markets in Europe. Poland, for example, is growing very quickly.
May have any figures?
Our exposure is at least a couple of billion. And we have, since a year ago, since 2 years, from almost zero, we now have between 40 and 50 projects in the pipeline.
On each specific project, when your exposure is a few billion and you say
€2 billion from almost nothing.
$2 billion like below 10 or? A big change in that number.
Well, coming from zero, anything is very, very high single digit. If you come from almost zero, then a few billion is 5. So what you see is that some countries are quicker. That can have something to do with the geographical location. If you're further away from where the action is, you may think that you are living in more relative safety than other parts of Europe. Some markets also have a more structure for that. So in some markets, the defense companies are owned by the state. And therefore, it makes it more that they're quicker to act. So we need to defend our country through our own defense companies, which we own, that we then also guarantee. And in some markets, there's more juggling around. Oh, how do we structure this? How do holders pay for this? How do we collaborate? And it takes longer. And look, we are a European bank. We want to help Europe to build up. The European societies want to build up their defense capabilities. And we are a sizable European bank and we want to help with it. Within the limits, of course, of the UN limitations that we adhere to. So no phosphorus and no non-conventional weapons, so that we stay away from. But other than that, we want to help with it.
And in terms of resources, like do something.
Yeah, well, we have a. So when we said we really going to. It was actually funny enough. It was the FD who pointed this out a few years ago. I said, yeah, I know. Incredible. Yeah, sorry, I didn't want to say that.
I really like my colleagues, so no problem.
Yeah. So there was a big societal change a few years ago, and that was at the meeting with the redacteur and all the editors there, and then some of your guys asked the question, so why don't you do, some guys are complaining about you're not doing so much about defense. I was like, what? So that, I never heard that question. Then of course we started to investigate, okay, there's a clear demand for it, and our policies as such may not reflect us so much, but the way we have used those policies for the last decades, if you do so little, starts to be more to do something, well, let's not do it unless. So we don't do this, and if someone comes, we need to go to this hurdle. So you build sort of a collective memory not to do it, unless there is an absolute need. And at some point, it clogs on the system. So you need to really start with the tone from the top. We're open. We need to just solve our policy, so let's make clear what is possible rather than writing down what is not possible, so the way that you write about it. And we also then build up a sector expertise, which that's now really focusing, because you need to build up sector expertise to understand what are they buying, or what are the structures, and if you talk about new technologies, about drones or protection gear, what is that then, and who then buys that, and what is the business model of that, you need to understand what this is actually about. And how can you collaborate then between governments and export credit agencies and guarantee providers? How can we do it in an ecosystem? It's like with transition finance, it's new technologies basically. To understand how does it all work, and that sector of expertise sits in France.
How many people?
Well, it's only a few people, but those people sit there. But then in each country, we also have a dedicated people who also then only focus on defense, and gradually that ecosystem builds on that capability. The same as with TMT or with infrastructure or real estate. You start with a small group, and then each of the companies in which you're active, you also have a person to act, and gradually you build up a collective knowledge. And then you write sector policies, and based on those sector policies, you get the world, the IT world right. So, and why is that France? Because France has a more pronounced defense industry, so there are people who by nature know more about defense than people in our countries. Not judgmental, just sheer knowledge of the country about defense.
Last questions? Thank you.
Thank you.
Here's something to eat for you if you want.